Hi everyone, it's Jack back with another video. Today I'm going to be talking about ZIM Integrated Shipping Services. It's a relatively small cap shipping company, just shy of $3 billion market cap. Very well known, and it is very well known because of its over 70% dividend yield, which attracted a lot of attention. Was over 100% at one point, and they were paying out. It's been down 74% in the last year, which has caused the dividend yield to balloon. But it's up 35% year to date, up 50% from its December lows. Valuations absolutely plummeted even with that increase. It's around a multiple of 0.6, less than 1, which is absolutely frightening. Bounced decently off its 52-week low. I want to establish, looking at its fourth quarter report and some recent metrics in shipping, whether this is a buy, sell or hold right now, and if its dividend is sustainable going forward, because 70% yield on anything, if that is sustainable, they are fantastic returns going forward. These are the dividends that the company announced and paid in 2022. You can see $2.85 a share in Q1, up to $6.40 a share in Q4, all at a reasonable percentage of net income. 44% of 2022 net income paid out. That's $16.95 a share on a current stock price of just under $23. Absolutely staggering returns this year for those lucky shareholders in terms of cash returns, but the stock returns pretty much negated that. You might actually be down depending on when you bought. So here are the results for the full year. Overall, you got to remember 2021 was an exceptional year for this business. So the year-over-year numbers, while impressive, are not absolutely outrageous. 17% increase in revenue to $12.6 billion. Adjusted EBITDA, $7.5 billion. That was up 14%. Again, we've got to remember this company's trading a market cap of under $3 billion at the minute. So that's staggering really compared to the market cap. But year over year, decent. 60% adjusted EBITDA margin is obviously very good. Adjusted EBIT $6.1 billion, that was up 6%. Operating cash flow, which is what really counts because this is what's essentially paying the dividend, still 2 times market cap, if not more. That was only up 2% year over year, but again, 2021 was an absolutely exceptional year for this business. The decline for ZIM stock started quite a while ago, but in Q4 we can really start to see why there were so many fears around this stock. Revenue down 37% for Q4 versus a year ago. Now, forget about the year-over-year numbers, up 70% year-over-year, but that is really clearly front-loaded. 2021 was a very successful year for this business. Start of 2022, very prosperous. However, when you're looking at the Q4 results, they really paint a different picture. Revenue down 37%, adjusted EBITDA down 59%, and massive margin compression here, 68% to just 44%. Adjusted EBIT margin compression even worse, 61% to just 27%. And that resulted in a net income decrease of 76% year over year, from $1.7 billion to just $417 million. Now this is really quite significant. Even though net income was flat year over year, this set paints a very tough picture for this business going forward, and that is essentially because shipping rates are coming down. It's been predicted for a long time. ZIM was at a cyclical high in shipping rates in late 2021, or basically the whole of 2021 and most of 2022, and the decline in shipping rates worldwide really started to bite this business now. I think this is illustrated best when just looking at some weekly shipping data. This is provided by Freightos. Really, truly brutal decline year over year. You look at the 1st of January 2022, rate in the 8,000 or 9,000 range. 1st of January 2023, and the below $2,000. That is a brutal decline. Any business, this is totally out of ZIM's hands. That is the reality of being a relatively cyclical business. But any business like this is going to struggle. That dividend, if not now, will eventually come under pressure. The problem is valuation have kind of already reflected this, so there's definitely some arbitrage opportunity perhaps, but that is just an absolutely brutal decline. January 2021, January 2022 were just about the best times to be a shipping business of the last 10 years, and the decline is now coming down, and we're kind of at normality, what we were in January 17, 18, 19, 20, and pretty much all through them years we're coming back down to, and ZIM's earnings will reflect that. And again, I think this graph illustrates it really well. The grey bars are last 12 months adjusted EBITDA numbers in millions. You can see they're really at the peak Q1 to Q3 2022. They're already coming back down to earth, and it's going to be an even steeper decline coming forward once those 2022 numbers get out of it, and we're going to be getting down probably to those Q3, Q2 2020 levels. So there is definitely a decline in earnings for this business coming, and a steep decline at that. And of course, management are aware of this, and that is reflected in the 2023 full year guidance. Adjusted EBITDA predicted to be in the $1.8 to $2.2 billion range, and adjusted EBIT to be just 100 to 500 million. Now, adjused EBITDA was 7.5 billion for 2022, so you can see that really is a precipitous decline. Average freight rates, they believe, are going to be significantly lower, which I think most people believe it's going to be back to normality essentially. They believe carried volume will be higher, partially due to those rates going lower, and bunker rates will be significantly lower also. Adjusted EBITDA down significantly, adjusted EBIT down even worse. Net income will be significantly lower and will probably be in that $100 to $500 million range, which means this stock is going to take a massive hit to price earnings. Of course, even with that said, at $3 billion market cap, let's say adjusted EBIT comes in at the top end of that, 500 million. Let's say net income is close to that. You're still looking at 6 times earnings. That's not ridiculous. I think it's fairly obvious that current valuations on a trailing basis of a PE under 1 are not reflective of what is going to happen to ZIM in the future. Earnings are only just really starting to fall, and there is a cliff coming. As I said, adjusted EBITDA for 2022, 7.5 billion. This year, 2 billion if they're lucky. That is a precipitous decline. That is going to be reflected in the valuation. But even still, if they hit the top end of the guidance, let's say net income is 500 billion, that's a PE of 6 at current prices. Fairly valued in my opinion. Shipping stocks tend to trade at quite a low PE because it's a cyclical industry. However, that dividend is going to come under significant pressure. There's no way it's going to be trading at 70% yields. I don't think it's getting back to its 52-week high anytime soon. With that being said, it's not overly expensive at 6 times forward earnings if the guidance is intact. Again, there's a lot of projection here. I just don't think this is really a stock to hold for the long term right now, because this is a cyclical industry and we're kind of coming off the top of a cycle. Although it's been priced in, I just think there's too many question marks with this business. With the dividend dropping, I don't know how many people are just holding to collect the cash from the dividends. However, I do think this is a relatively well managed business. They've done a lot of good with the extra cash flow they've had. They distribute a lot to shareholders in a sustainable way and pay down the balance sheet. So it's definitely a decent business. However, I'm just not sure I can invest in it right now or in the near future. With that being said, you let me know what you think in the comments down below. Of course, I'm not a financial advisor, so you should not take this as financial advice. Do your own research and due diligence and make your own decisions. Like and subscribe if you enjoyed the video, and comment down below what you think of ZIM, what you think of the dividend going forward, what you think for the prospects of this business. See you again next time.